For decades, oil has powered the rise of modern China. Its factories, cities, and industries have all depended on a steady flow of crude, much of it imported from abroad. But behind this growth lies a critical vulnerability, one that Chinese leaders have long viewed as a national security risk. Today, China imports around 11 million barrels of oil each day, most of it transported by sea. These shipments pass through narrow choke points, especially the Strait of Malacca, a vital corridor connecting the Indian and Pacific Oceans. In times of conflict, this route could become a weakness. The United States, with its powerful navy and global military presence, could theoretically disrupt or block China's access to these supplies. This fear, often called the Malacca Dilemma, has shaped China's long-term strategy. Rather than simply securing more oil, China has begun to reduce its dependence on it. Despite years of rapid economic growth and massive infrastructure expansion, China's oil imports have leveled off in recent years. This is the magic trick, an economy still growing at scale while slowing its reliance on crude. Part of this strategy involves increasing domestic production. Chinese energy companies have invested heavily in exploring and extracting oil and gas within the country, even in difficult environments. At the same time, China has been building vast strategic oil reserves, stockpiling crude when prices are low to protect itself from future disruptions. But the most significant shift is happening beyond oil itself. China is transforming how it uses energy, particularly in transportation. With a large population but relatively low car ownership, it has an opportunity to reshape its automotive future. Instead of following the traditional path of petrol-driven growth, China has pushed aggressively into electric vehicles. The government has invested over $200 billion into developing the EV industry, supporting manufacturers and offering incentives to consumers. As a result, China now produces the majority of the world's electric vehicles and has built one of the largest charging networks globally. This transition reduces the need for imported oil. Electric vehicles rely on electricity, energy that can be generated domestically through coal, nuclear, hydro, solar, and wind. At the same time, China has spent more than a decade positioning itself as a global leader in renewable energy, dominating the production of solar panels and rapidly expanding wind and solar capacity. Yet China has not abandoned oil entirely. It has diversified its sources, importing from countries such as Russia, Iran, and Venezuela, often through smaller independent refineries that operate with less scrutiny. This allows China to secure supply while avoiding some geopolitical pressures. The result is a multi-layered strategy. Produce more at home, store more for emergencies, diversify imports, and gradually reduce demand. While China still relies heavily on oil, its growth in demand has slowed significantly. Some forecasts suggest that its oil consumption could peak within the next few years, a major turning point. China is not just trying to compete in the global energy market, it is trying to change the terms of that competition. By reducing its dependence on imported oil, China is limiting the leverage that others, particularly the United States, could use against it. In doing so, it is quietly reshaping the balance of power in the global energy system, not through confrontation, but through transformation.